As the technical and community foundations of XPL began to take shape, the development team focused heavily on optimizing every layer of the network for both efficiency and reliability. At the consensus layer, validators operate in a Byzantine fault-tolerant environment that rotates regularly based on stake and performance. This design not only enhances security by preventing centralization but also maintains consistent transaction finality even under high network load. Unlike legacy blockinize where congestion leads to exponential increases in transaction fees and unpredictable confirmation times, XPL's consensus mechanism ensures a level of stability that both developers and users can rely upon. Each validator is incentivized through staking rewards proportional to their contribution to network security, while misbehavior is penalized via slashing protocols, discouraging malicious or negligent behavior. Validators are also subject to transparency rules, including published operational metrics and reputational scores, which provide both the community and external observers with tools to monitor performance and maintain trust. Parallel to the consensus layer, the execution layer introduces a groundbreaking approach to smart contract processing. Traditional blockchain architectures process transactions sequentially, meaning that every transaction must wait for the one before it to be finalized, creating bottlenecks and inefficiencies. XPL's execution engine solves this problem through parallel execution of non-conflicting transactions, effectively allowing multiple smart contracts to operate simultaneously. This approach significantly increases throughput, measured in transactions per second (TPS), enabling high-frequency applications like gaming economies, micro-payment platforms, and decentralized finance protocols that rely on rapid transaction execution. Moreover, this parallelized IOS execution is complemented by a sophisticated fee oracle system, which stabilizes transaction costs by calculating average network demand and capping fees during periods of high congestion. Users benefit from predictable costs, while developers can design applications without worrying about sudden spikes in operational expenses that often deter innovation on other chains. The settlement layer of XPL provides the final piece of the puzzle. Settlement ensures that assets, whether native XPL tokens or cross-chain assets, can move securely and efficiently between different blockchain networks and participants. XPL achieves this through checkpointing mechanisms, cryptographic proofs, and bridge protocols that link XPL with major blockchain ecosystems. Cross-chain interoperability is increasingly essential in today's decentralized finance environment, where liquidity and asset movement are critical for market efficiency. By providing secure, reliable bridges, XPL enables developers to leverage liquidity pools, collateralized assets, and decentralized exchanges across multiple networks without compromising security or decentralization. The settlement layer also integrates optional privacy features using zero-knowledge proofs, allowing enterprises and regulated institutions to execute transactions discreetly when necessary, providing a balance between transparency for general participants and privacy for sensitive operations. Tokenomics is a cornerstone of XPL's long-term sustainability. The fixed total supply of XPL is allocated strategically to balance ecosystem growth, community engagement, developer incentives, and long-term project sustainability. A significant portion, approximately 40%, is allocated to ecosystem incentives, including liquidity mining, developer grants, and hackathon rewards, ensuring that both developers and users are motivated to contribute meaningfully to the growth of the network. Another 20% is reserved for community airdrops, targeting early adopters, testers, and contributors who engage with the network before and during launch. This allocation ensures widespread token distribution, reducing the likelihood of concentrated holdings that can lead to market manipulation. The foundation retains 15% of tokens to support long-term growth initiatives, strategic partnerships, and operational costs, while the core team and advisors receive 15%, all subject to vesting schedules spanning several years to align incentives and prevent sudden market disruptions. The remaining 10% is held in strategic reserves, which can be deployed for liquidity stabilization, unforeseen expenses, or ecosystem development as determined by governance mechanisms. The functional utility of XPL tokens extends across multiple domains. As a medium for transaction fees, XPL ensures that the network remains secure and inceptitious validators to process transactions efficiently. As a staking asset, XPL tokens empower holders to participate directly in network security while earning rewards proportionate to their stake. Governance is another critical function. Token holders can propose, vote on, and implement protocol upgrades, parameter adjustments, and treasury expenditures. Beyond these core functions, XPL also serves as collateral in decentralized finance applications, allowing developers and users to create stablecoins, synthetic assets, and lending platforms with native token support. This multi-purpose design ensures that XPL is not merely a speculative asset but a functional currency embedded deeply in the network's operational framework. Security has always been paramount to XPL's design philosophy. Prior to launch, the codebase underwent multiple independent third-party audits, which identified and remediated vulnerabilities ranging from smart contract logic errors to potential economic exploits. A live bug bounty program invites the community to continue scrutinizing the protocol, providing both additional oversight and an incentive for ethical disclosure of issues. Critical contracts have undergone formal verification, a mathematically rigorous process that confirms contract logic behaves as intended under all conditions. To protect the treasury and user funds, all multi-sig wallets require a threshold of signatures from trusted operators before executing large transactions, ensuring transparency and accountability. Collectively, these measures create a robust defense against common blockchain security risks while signaling to the market and community that XPL prioritizes long-term trustworthiness. The roadmap for XPL's ecosystem reflects a carefully staged approach to launch, adoption, and expansion. Initial phases included private and public testnets, which were designed to stress test the consensus mechanism, transaction execution engine, and cross-chain bridges. The mainnet launch marks a significant milestone, introducing the Genesis block, validator set, and initial liquidity pools. In the months following launch, the team plans to implement developer grants, hackathons, and community engagement programs to encourage the creation of innovative applications. Later stages will expand the network's functionality with advanced real-world asset tokenization tools, privacy modules, and interoperability with other major blockchain ecosystems. This roadmap is designed not only to deliver incremental technical improvements but also to foster a vibrant ecosystem where developers, investors, and end users can participate actively and benefit from the network's growth. While XPL's technological and operational design is comprehensive, the team remains acutely aware of market behavior, particularly in the context of newly launched tokens. Historically, new cryptocurrency launches have been prone to speculative cycles that include rapid price inflations, commonly referred to as pumps, and equally rapid deflations, or dumps. These phenomena can occur due to hype, concentrated token holdings, or sudden shifts in market sentiment, and they often create risk for both casual and professional investors. XPL addresses these risks structurally through its token distribution model, vesting schedules for team and foundation holdings, staggered release of ecosystem incentives, and wide airdrop allocations reduce the likelihood of sudden sell pressure. Additionally, the protocol provides transparent on-chain data and metrics, allowing participants to observe liquidity depth, holder distribution, validator participation, and trading volumes in real time. While the team cannot does not predict short-term price movements, these measures are intended to create a more stable launch environment that encourages responsible participation over speculative hype. Market awareness and education are vital components of XPL's launch strategy. Participants are encouraged to understand the mechanics of speculative activity and recognize the signals of potential pump and dump behavior. High concentration of tokens in a few wallets, rapid increases in trading volume without corresponding real-world utility, and sudden social media-driven hype campaigns can all indicate that price movements are being driven by speculation rather than intrinsic network growth. By combining these insights with robust technical foundations, equitable token distribution, and active community governance, XPL provides users with tools to make informed decisions and to engage with the network in ways that prioritize long-term value creation over short-term gain.